Finally, after a few months and a bit of a slump, the JP Morgan Equity Premium Income ETF has officially raised their dividend up the highest it's been since December of 2022. JP Morgan officially posted on the JP Morgan JEPI website as of Monday morning, April 3rd, 2023, that the forward dividend payment for April is going to be 44.5 cents per share of JEPI. Now, the ex-dividend date for this dividend is going to be on April 3rd. The record date is going to be April 4th. And the payment date is going to be just a few days later on April 6th. Now, like I said, this is the biggest dividend that JEPI shareholders, along with myself, have seen in the past few months. It's great to see that finally, after a few months, JEPI's dividend payment is now back on the up and up. It's been as long as since December 29th of 2022, where JEPI paid out 57.2 cents per share for JEPI, and then since then it dropped down to 44 cents per share, 41 cents per share, which was last month, which had a lot of JEPI shareholders sort of worried. But now we are back up, we are at 44.5 cents per share. Now, if you are a JEPI holder, it's important to understand how this exchange traded fund actually works and also how the dividend is determined on a monthly basis. The JP Morgan Equity Premium Income ETF is an exchange traded fund that invests in a diversified portfolio of U.S. equities, and then here's the kicker, it writes covered call options on those equities. So it's more or less a covered call fund that invests in some pretty high quality companies. This strategy generates income in the form of premiums from the sale of options, which are paid out to investors as dividends. So this is how it works. The ETF collects premiums from the sale of call options on the stocks in the portfolio. The amount of premium is determined by several factors though, including the price of the underlying stock, the strike price of the option, and the time until expiration, and also most importantly, the market volatility at that given time. The premiums are collected and distributed to investors as dividends. So when it comes to investing into a covered call, during volatility, you could see, in theory, the covered call pay out higher and higher dividends. This is because stock premiums or option premiums can be high during periods of market volatility, because investors are willing to pay more for the option to buy or sell a stock at a particular price in the future. And if investors are willing to pay more for an option, the JEPI shareholders are going to get paid more because remember, JEPI sells options. Now, volatility is a measure of the magnitude and frequency of the price movements in the market. When volatility increases, the potential for larger price swings also increases, making it riskier for investors to hold stocks without some sort of protection or hedging. And one way to hedge against risk is by selling options, which is exactly what JEPI does. Now also, during high times of volatility, the demand for options typically increase as investors seek to hedge their positions. As a result of the price of options or the option premium, you can see the option premium increase significantly. Other premiums can also be affected by other factors. When volatility is going crazy, anything can happen. So now with JEPI's last dividend officially live and again moving up and up, the question remains, is JEPI going to outperform the general market throughout this next year? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.